Hey everyone, welcome back to what's happening in real estate this week, and we got some really good shit to talk about. I just want to welcome Conrad Zurini, broker owner, REMAX Escarpment, REMAX Niagara, top broker of all REMAX brokers around the world.
Hey.
Awesome. And Brian Hogben, Mission 35 Mortgages. He does it better interest rates than the bank, and that is true. They can shop around. Anyway, myself, Rob Golfi here with REMAX, the Golfi team. I'm with the best team here, the mortgage, the broker, and the sales rep. Now, there was an article in the paper, I think it was Globe and Mail. Canada's housing frenzy is over, and yes, it's a good thing. Well, it's a good thing right now, but here's what they're saying. Despite fears, Canada's housing market has not collapsed. It's just caught its breath, and it's much needed a reset towards something healthier and more sustainable. Now, it has caught its breath. People are crazy if they're thinking the prices are going to go down anymore. They are not. I'm telling you, you guys sitting on the fence, interest rates are the best right now. Like they're good interest rates. We got spoiled with the 1.5% to 2%. I'm telling you, you guys, you'll never see that again. And they learned a lesson on that. And in our lifetime, I'm not even sure. Like Brian's only about 2 years, 3 years younger than you and I, Conrad. Maybe in his lifetime, he may see that when he's at 80 years old.
That's hilarious.
but anyway, I know it is a breather, and we're flatlining right now, but it's not going down. And this tariff thing has caused a lot of shit. But I don't know if we're going to go into. They say a recession. I've never heard the word recession yet on the news.
No, I haven't either. No.
So that's a good thing. And but I do think this is a breather, guys.
Yeah.
Well, I think the two things that we talked about this, Conrad, yesterday. There's inflation and delinquencies when you come down to mortgages, right? And people need to remember right now. And you pulled the number out yesterday, Conrad. Delinquencies are on the rise, but they're still low, right? Like, yeah, they've gone up, but they were historically low, and they've gone up. That people need to remember this. Out of all, and this is why inflation is creeping in quicker than what people think. When you have your mortgage up for renewal, everybody's been terrified that, the sky is falling on my mortgage renewal. The sky is falling, honey, we're going to have to sell the house. They come and talk to their favorite mortgage broker. They consolidate some debt. They have some equity. And guess what? Their payment's the fucking same. They re-amortized it over 30 years. They consolidated some debt. So you know what they do?
Yeah.
Let's go out for dinner, honey. Let's go buy those $20 grapes, honey. You know what? We're okay for the next 5 years. And all those renewal dollars that they thought they were terrified about, pushing inflation back in. And when inflation comes, interest rates rise. So to your point, Rob, like, it is a great time right now. Rates are low right now. If we see another quarter point drop, great. That's awesome. That's on the variable.
They're going up,
bond rates.
Yeah, you were talking about the bonds.
You're going to see
yesterday's thing a little bit.
Yeah, no, totally. Well, RBC, they'll talk about that. Capital Markets puts out. So Capital Markets that's what it's about. It's about capital and the flow of capital, and they're very in tune with the bond. And they were saying 2 drops definitely this year. Now they've holded it on that. They said, look, even with the tariffs, the Canadian economy proves some resiliency. So we got some resiliency in the Canadian economy. We're not seeing these job losses that we thought. And to Brian's point, we're going to see a slight uptick in inflation. So they're saying unless something dramatic happens, they don't see the BOC dropping 2 more points as far as they can see right now into the short term and medium term future. So that's an interesting thing, because those guys deal with money every day. So put that to rest. I will say median price for the past 3-4 years has been hovering around the same thing in Canada. We're only down, like, across Canada, maybe over last year, 3.5 points, but that's the composite. And that's, that takes into consideration condos have taken a hit, and that is factoring into the price. But single detached will be the cheapest they will ever be today.
Yeah.
Bar none.
Well, remember when people bought in the first quarter of 2017 and 2016, they thought they overpaid?
Yeah.
I pray to buy houses in that price point right now. Like, you know what I mean? Like, it's like, but I mean, people thought they were like paying a lot of money.
Oh yeah.
But the one thing is this is a good breather. This is a good breather for buyers right now. They can do their home inspections. They can do all their things that they need to make sure they're buying the right house for themselves. But if you're buying, hold on for at least 5 years. Don't buy and then end up thinking, oh, I got to sell in 6 months or a year. Like really think about your life, about where you're going, where you're at, and look at that investment. Like depending on the cycle of the market, like if you're buying, and I'll tell you something, if you buy next year, within 6 months, you're probably going to make some good money on your equity on your house. But right now, it's a safe zone. This is a safe zone for buyers. And if you're a seller, you will get the good value for your house, but you got to price bang on. It's precision pricing, just like you said, we talked about last week. It's precision pricing.
Yeah. And we're seeing two categories of pricing. There's that 6 to 9, $1 million, but then there's this 1.6 to 2 million that's really spiked as well. So we're seeing good activity at that one end, and then that middle, right? That middle price point. So if you're in those areas, people are looking for that. There's buyers. Rob, you're right. This is I look, housing starts are at an all-time low. Okay. I think the HST should be across the board, not just for first-time buyers of new. Yeah. It only affects 5% of the sales. There's only 5% of new sales that go to first-time buyers. That ain't going to move the needle. I feel that they should do that. They GST
always do stupid things.
That
don't really that doesn't do anything for the majority of the public. And and it's just more for publicity that they're doing something, but it's doing shit. That's what it's doing. You know? And
then you got a 10% shift. And I think they may not be the best ideas sometimes, but like when I look at that CMHC rule where they upped it from 1 million to 1.5 million, they upped the amortization from 25 years to 30 years. Didn't move the floodgates in the market, but we started to move in the right direction. Whereas if affordability, which continues to be an issue, and you see mortgage rules continue to ease slightly in those regards,
I think the next thing is a stress test. They gotta get.
Well, I was just going to bring that up. Now, they're saying they're bringing some more new mortgage rules coming up soon. Like that was in the Globe and Mail, I think, also this week. Some new mortgage rules coming up.
There's a loan to income ratio that it's more like the ones that we've looked at, loan to income ratio, but that's on a portfolio basis, right? So basically, it means that they can only lend out a certain portion of mortgages in excess of a loan to income ratio. So, but I don't think that we're going to see, I don't think we're going to see restrictions by any stretch of the imagination. I think that we will see, we were talking about this yesterday as well too.
Well, they have to.
We'll see a little bit.
And I think the stress test, you look at the US, the US they're screaming affordability too, but it's way better than it is here in Canada. They didn't have a stress test. And same thing with UK. Again, they didn't have a stress test either. And they're okay, and their income to debt ratios are half of what ours are. So I think you got to let the market dictate it. I think the stress test fiddled with the market, and I believe that what it did was it caused this whoosh of people when the interest rates dropped. So you remember, stress test comes in, we kind of like went slow. Then when rates dropped, everybody thought, oh my God, it's a bonanza. And they all jumped in. It was like, giving candy to a baby, like after not having any candy in their lives. So what happened, I believe the stress test is probably the single biggest reason why we're in this unaffordable, let's treat Canadians like adults. Let's go with the market. Don't you think, Brian? Like, treat the Canadian homeowner like an adult. You know what I mean? I know, and you know what? If I get in over my head, I'll deal with it. Why are you always trying to tinker with the market? Because like I said, UK is okay. So is the US. Canada is in this spot with huge debt loads. And it was that stupid stress test, I believe.
We got the helicopter parent. That's what we got.
They should actually keep the stress test for B lending and private lending, because those are the ones that honestly are not treated like adults. the people in the banks who, I hate to say it, right? But it's just like, it's kind of like you got smacked, you're going to your room, you're getting a B mortgage or a private mortgage because something happened, right? But the A banks do not have a lot of delinquency. They are renewing.
And they're still
they are
way
paying their
ahead.
bills. I have not seen one mortgage that we put into an A lender over the past 5 years go bad. I have not seen one. I've seen B deals, where they're in a trust company. I've seen private lenders. I've seen, but not on the A side. And to your point, I treat them like an adult and say, yeah, you know what?
Yeah.
You got 5% as a rate. We'll qualify.
Move with the market. Why am I protecting people, right? You know what I mean? Let's move with the market. And if I have to sell, I have to sell, not based on some other thing. Like it's my own issues. Why are we penalizing everybody because there was a couple of bad apples? I'm telling you, it ruined what we have. The other piece is I think we're going to see a spread between insured and uninsured. Because to your point yesterday, Brian, CMHC is dying right now because they have no money coming in. A lot of people are putting 20% down. And they're not getting those. So I think, do you ever see, Brian, the spread between conventional and insured? It's now 29, 30 basis points. You ever see it going to 50 basis points, making that 5% down more attractive?
Oh,
I could. Well, it's a people are so ingrained and learned now to put down 20% because they got the bank of mom and dad anyway. So they're like, hey, why not save the CMHC fee? But I agree. Mm-hmm. I think CMHC is going to have to get a little bit more creative than the other mortgage insurers are going to follow suit because it's a revenue stream. They're still a business. They still generate income for the government. And the other ones are private and they generate income too. So
and put your money aside for a rainy day. Like just let's say you did lose your job. Instead of putting 20% down, put 5% down. Keep that other 15% as a nest egg, or maybe they make you put it in some sort of investment vehicle, because I think that would make a lot of sense. Because I just did it the other day on a 5-year mortgage. The differential, it was $600 a month cheaper, obviously with 20% down. But at the end, the interest at 20% down, it was $131,000 of interest after 5 years. For 5% down, it was $152,000 of interest. So, like at the end of the day,
peace of mind.
Yeah, you got some peace of mind. Yeah, invest it in something.
To have that safety net is worth
that
worth
10
more
or
than
15%
$20,000.
into
like that
something.
Safety net's worth a lot.
Grow that side as well, because homes aren't as growing as rapidly as they used to. So kind of hedge your bet. I think we got to start hedging things. Be more creative.
What country in the world is experiencing high housing prices like we are and things like that? Is it Australia or the UK?
Australia, New Zealand, and us. Yeah, we're the ones. Yeah, that's it. The rest is okay.
So what is it that we have in common? Like, what is it? Is it just shortage? Just bad governments? Like, are they like what is it? Like,
we were least affected by that crisis. I think that reset. That reset that happened in 2008, it lasted only in Canada and the UK and whatever. They were kind of, they didn't get the effects of it, but all over Europe did, Asia, even a little bit of South America, but not much. But obviously the US got affected. So they didn't get that great wash, that great reset. So
you were talking about it yesterday on your thing. Was it you or you, Brian, that were talking about? We only had a little blip on that.
Yeah, that's it. 4 months.
Yeah, I actually.
In 2008,
the funny thing about it is on the radio show, I was talking about
and then you saw
the different recessions over the years, and I said 2008, 2009, the Americans, they took a beating. We just kind of like went over a speed bump, and it was over. Like it was just nothing for us.
I bought the biggest house of my life at the time off of Conrad, who was the listing agent at the time, in 2008, and I remember the global financial crisis was happening. He had the house that I live in today for sale, and I didn't even think twice about it.
We were just watching the
mindset
news.
I think of Canadians.
Yeah, we didn't feel
like, oh, this is happening. Yeah. I'm in the mortgage market. And their real estate. We love our real estate.
Yeah.
And we want to keep
we do.
So,
and we
question I want to ask.
We keep it high.
Would you hold offers in this market?
Depending on the price point, I'm seeing it, especially if you're going low, like, that $399, $499, $599. Those are, like, we're seeing stuff going over 200,000 over, right? You know what I mean?
Are you seeing stuff like that?
Yeah,
Conrad?
180, 160.
Wow,
Yeah, it's an interesting phenomenon right now. Yeah,
like there's a few agents on my team. They're good at it. They know their pricing really well. You got to know your pricing.
Oh, definitely.
Like otherwise, you'll put shoe in your mouth. I find it that there's some agents that want to do. I said, be very, very careful. I go, because let's say the house is worth $450. You go and you list it at $399.9, and you might only get $325 for it, because a lot of those people, they're not jumping leaps and bounds for that price point. You know what I mean? Like
$299. They got to go $299 for that price. You know where it's. Yeah. Well, no, that's.
I don't like those $1 ones.
$1.
It's working in great areas like Cambridge, Guelph. It's kind of interesting. It's working very, very well in those areas. But yeah, I think that $299, $399 is it's making a comeback. 100%.
That's it. Hey, Kitchener, Cambridge, Waterloo, and Guelph area. Hey, I think Conrad, guys, I think we got to go there and move into that territory. I think it's a good territory.
It's a good little market, right? It's this little well-kept secret over there, right?
Yeah, no kidding. We've been sitting over there in that little hidden little corner of freaking Ontario. I think that's the move that we have to make, is go out there. That's
absolutely.
Yeah. Oh, stuff. Well, was it Brian?
I love it.
Yeah. All right, guys, listen, I appreciate your time. Thank you so much. And listen, tune in. If you guys are listening, check us out on YouTube and follow us and listen to past episodes and future ones. Anyway, guys, thank you so much. And we'll see you next week.
See you next week, Rob.